Thank you for joining us. I'm Gord Long. As is always, it's my pleasure to have back with me today Charles Hugh Smith, well-known and prolific writer on the web, who is the publisher of the website of2minds.com. Welcome back, Charles.
Thank you, Gordon. I'm really looking forward to our conversation today.
Well, we haven't had one here in a couple of months, so I hope it was a great Christmas and New Year's for you. You're back in California though right now, right?
Yes.
And so why are you in California in February when you got a place in Hawaii? Just out of curiosity.
Well, it really boils down to my mom turns 90 this month, and so I needed to come back and celebrate her 90th birthday with her. Otherwise, I would not be here.
Oh, you're a good man, Charles. I'm in Boston, as everybody knows, and we just set records for warmth here. We're on the Super Bowl parade, 63 degrees out, even some of the players with no shirts. I don't want to curse myself because now we'll get 2 feet of snow out of nowhere, but it's been great here too. So I'm not envying you right now. That's what I'm trying to say.
Yeah, it's been a lot colder here than in Boston.
Charles, I'm showing here our agenda for this session. And as we discuss, we're going to take a different approach this year to our annual themes. Rather than just covering what we individually see based on our own research, we're going to try and draw a synthesis from them to see if we can gain further insights from us. This session, like all ours, is unrehearsed, so our listeners will be exploring our thinking together in real time with us. Listed here are the themes we both submitted to discuss today. The nomenclature shown here may be a little foreign in some cases, but don't worry, we'll explain each as we go. But to put these into context, I have this chart, Charles. If you look at the bottom of it, goes back 2012 in the bottom corner, called Forces of Social Globalization, and this was a roadmap we did all sorts of shows on for quite a number of years, on the different elements, on what we thought was unfolding here. And this chart came about in really trying to put a framework around, because we talked about things like distortions in monetary policy, what the global imbalance was meant, the amount of central planning and crony capitalism. We did all sorts of shows on that. You can see these in the red captions up through the various boxes. Financial repression. Matter of fact, I actually started a whole website called the Financial Repression Authority back then, going through to statism. A lot of these became thesis papers. But the point of this chart was that we felt that we were going in from the bottom left of individualism and transparency and simplicity, where we're moving through global brands to more complexity throughout the whole force of globalization. At the same time, going up the y-axis, more polarization, more opacity, and towards collectivism. And what it was leading us towards was a frightening thought of maybe totalitarianism, more control by the state. So, and rather than really the battle wasn't whether it was on the left or on the right politically, but rather whether it was up or down, that is libertarian versus totalitarianism, and we did shows on that. But you can see on the top social unrest and corporatocracy, and I think in some ways some of the themes we're going to talk about really start to show we're way up here in this top right-hand corner. Comments there?
Yeah, I think that's exactly my thinking, Gordon, is that this trend that you established and the characteristics of this trend, it's inevitable, because really the dynamic, as I see it, is there are the people who are benefiting at the top of the status quo are trying to save the status quo as the fundamentals erode and decline, and so they're responding with greater and greater efforts at control and at financialization and financial repression as the only way they see to save the status quo as it exists now, as its fundamentals erode. And so there is a logic to this roadmap that you've created, and what we're really discussing today is how is this manifesting in the world today, and that's what makes this a conversation as opposed to us just kind of regurgitating like an old static thesis or something. We're actually going to talk about the yellow vests and things that have come up in just the last few months that actually are manifestations of what you've laid out here 7 years ago.
Exactly. To put some structure into the synthesis, I've taken an initial stab, Charles, at seeing if something jumps off the paper from each set of the themes shown here. And you can see I saw, at least to start this, 3 subjects that initially seemed to link our themes. The final stages shown in the middle, the final stages of the debt supercycle. Is that what's at hand here? And we've got proof of it. 2, a fraying social contract and decaying social order, and we've talked about that many times, but it's keeps pushing itself forward. And 3rd, the forces of social globalization in terms of complexity and collectivism. That in many ways that chart we were just describing, and that's by coincidence. It wasn't because I looked at the chart when I drew this up. I actually, when it came to it, I went and got the chart to put up here. As we go through them, we may need to rename them or add more or consolidate further. I'm not sure, but let's just jump right in. To kick this off, let's kick it off with your 2 themes, and then I'll talk about my 3 themes that seem to be pointing towards indications we are in the final stages of what is often referred to as the debt supercycle. So we'll go through each of the 3, but let's start with this debt supercycle as a synthesis.
Okay, great. Well, the 2 elements of the debt supercycle that I'd like to that I think are manifesting right now and will continue to play out over the next decade is China's tremendous expansion of credit and debt and speculation, and that we can put some numbers on that. That the total debt in the Chinese economy, state-owned or enterprises, private sectors, and so on, was 7 trillion at the beginning of the global financial crisis in 2008. And the Chinese authorities' response to that was to pile up 40 trillion US dollars in total systemic debt in a mere decade. And so you've seen this tremendous leap in debt, which is characteristic of the debt supercycle, right? This is when a dollar of investment no longer generates much GDP, then the solution to those people in the system is to just then go borrow $10 and then extract that same nickel of growth. And when $10 isn't enough, then go borrow $100 and get that nickel of growth. And that's where China's at. And so China, a lot of people are bought into the China bullish story that China's going to rule the world and so on. And this is a confusion of what I call the S curve, which a lot of people use this, which is when an economy is first expanding and first has a market economy and has access to credit, it has a boost phase. And so for Japan, this was 1955 to about 1980. And then on into 89. And so the economies grow very quickly when they finally get access to markets and credit. And so the Chinese economy had this enormous boost phase, and now that's over. They've already reached a stagnation and decline phase. And so you start reading, if you read before it gets censored by the Chinese authorities, if you read stuff coming out of China, then you see that their companies are not really that profitable, and the local governments are totally dependent on development fees for new, basically ghost cities. And so they have all the structural flaws that are shared by the West, frankly, right? I mean, a tremendous debt bubble, malinvestment on a fantastic scale, financial repression, and a lot of trickery, right? Like the Chinese central bank is burying bad debt, to get it off the balance sheet so it looks like everything's okay. And so there's a lot of trickery going on with GDP and other things to make it look like everything's okay, but it's really not okay. And then if we talk about global energy, we're in a conundrum that a number of global, energy analysts have talked about, and I've learned from them, which is if as the economy slows, the global economy, slows, then demand for energy, oil, declines, and so then the price drops. But then, we've already used up all the cheap, easy to get and process oil, and so the producers have to have oil at a certain price point for them to make money and to go ahead and do it. And so we're in this weird period of like stagnation where the price is not high enough to go ahead and profitably extract unconventional and heavy oils. And so it's going to leave a situation that's really doesn't have a solution. In other words, if the prices go high enough, like say $80 to $100 a barrel, so producers can go ahead and exploit these hard to get sources, well, then consumers can't afford it and the economy goes into recession. But if oil drops to $30 a barrel, then nobody can make money producing it. So then you got a supply issue. So those are my two manifestations of the super cycle.
Charles, when you're back on China, the reserves, the proof of it is they're what saves them if there's going to be a positive future for China, which there will be, but it's got some, as you correctly point out, some serious issues in front of it that has to be resolved. You see it in their shrinking reserves. They have so much foreign exchange reserves that they have built up based on U.S. debt growth in the developed world, debt growth. But you're seeing that shrink now. They're actually, what they're pulling out of U.S. Treasuries steadily and slowly, but their global reserve levels is now falling. And you saw here in late December, early January, they pumped over $1.1 trillion, not yuan, into their economy to keep things going. This is a country that was trying to, and as everybody was, reducing easy money. It was forced into it. And so with their whole flawed accounting, if you would, the problems are massive there. And it's all a function of the debt super cycle itself. And their biggest problem, we've had shows on this, is their economy is, the exports and the imports almost net out. They have massive imports, just slightly smaller than their exports. Their GDP formula, it's capital formation, it's capital investment, the flow of money into the country. And that's changing because the credit contraction, which is already underway around the world as part of this debt supercycle. Charles, I have the three of my six themes this year are shown here on the right that I think feed it too. I just finished writing a paper on de-dollarization, which is at MAD-SII, our 2019 thesis paper. And I thought it was going to be maybe 30, 40 pages. It's 150 pages, and it's not to overwhelm it. But as I got into it, I thought I understood it. But was it ever an eye-opener to me of what is going on and the rate at which it's going on? And we have to appreciate that the dollar well, first of all, the United States Treasury is the whole basis of risk-free assessment of money. The 10-year Treasury is the basis of what's considered a risk-free loan, and everything else, the whole credit structure around the world prices off that. And that's all based on sitting on the dollar, which is the primary reserve currency around the world. If that changes, the entire edifice will shift. I didn't say it will crumble, but I will say that we'll have serious problems. And the trillions of dollars that the United States has exported, literally without inflation, are not needed as much anymore and could come back and will come back to the United States in the form of credit, which will create incredible inflation potentially in the United States. And when I got inside de-dollarization, the drivers of it, some of them are obvious, but some are not. The whole U.S. sanctions process that we're now have been doing with any number of countries, from Russia, Iran, Some of the smaller countries, etc., around the world, as political promises, as political ways of making things happen. What was happened, the world is now seeing, is the United States has weaponized the United States dollar. Instead of using military, it's using economic force in vis-a-vis sanctions, and so the U.S. dollar is the primary vehicle of that, and therefore people are doing all sorts of things to get around it. You're seeing reduced U.S. export trade, which less dollars are needed. We're seeing more and more bilateral trade between countries where they don't trade using dollars. They're actually using their own currency, so they don't need them in their foreign reserves. You're seeing the United States abuse of the reserve currency status or exorbitant privilege, so therefore we're exporting inflation to these countries, and that's causing problems. They're trying to get out from under it. The whole shrinking petrodollar requirement, where for those that aren't familiar, all oil and gas in the world, or oil, has to be bought and sold in U.S. dollars. That was the whole premise of Nixon, and the petrodollar. Well, that's not happening anymore. The countries from Iran, Russia, China, India, etc., are all now starting to trade in non-U.S. dollars, and this is a huge amount of dollars that aren't needed anymore, and will come back to the United States' claims. And the changing currency reserve balances. I mentioned China's shrinking. Other currencies such as the euro and the yuan now are legitimate reserve currencies and must be held with this trade versus holding them in U.S. dollars. There's the euro dollar shortage, and then you've got all of these countries in Eurasia that are now starting to use their own currencies. So you've got actions in Russia, China, Iran, India, Venezuela, Turkey, Iraq, even the EU, that are moving aggressively away from the dollar in many ways. And you see it with energy trading. They're using cryptocurrencies. They're even reinventing the SWIFT system. And I didn't mean to go on, but it's so significant that, and what it really stems back to is a lack of confidence in the United States system. And that's because we're a country that has consumed more than it produced for years. We've removed ourselves from sound money, and we're living off and exploiting the exorbitant privilege. And the rest of the countries around the world are no longer tolerating this as we move from a unipolar system to a multipolar system. And at the core of it is this unsound money, which is an indication that the debt supercycle is no longer going to be able to continue, because it's really been about the dollar and the euro dollar standard, which is a whole discussion. But we have the other cracking fiat currencies. I list here as one, because we're seeing a shift towards hard assets and value in cash. People looking at viable business models, and because there's almost a forced race to the bottom amongst the fiat currencies to allow them, we call it currency wars, to get a trading advantage. So they have to debase their currencies, and part of that has become such a part of the system, and also allowing the buildup of debt that goes with it. That's starting to crumble, and then the other part of it, and this is a long discussion I don't have time to get into, is the whole model in Europe, the EU, as an experiment. It's failing. It's fracturing. There's no question. And we're going to see pretty soon, in my opinion, another European banking crisis of unprecedented levels. There's a whole issue of how they do their banking, the leverage that's in the banks, where the money's been lent out around the world, and we're already starting to see it in many forms. Something that I thought really brings it together more effectively, and that is we have this whole tsunami shown on the left that is really bad money practices. The amount of entitlement programs that have to be funded that are unfunded right now, the size of the fiscal gaps in the United States specifically, the size of the pension issues, the size of deficits, all these kinds of fiscal problems that are going on right now are looming, and they're unsolved. On the other side, on the right-hand side, we've got this whole mountain of debt whether it's corporate debt and the corporations, the positions that they're in right now, whether it's sovereign debt, household debt, etc., that themselves of trying to carry that debt are also putting pressures. And right in the middle, it's all dependent on the U.S. dollar and the U.S. Treasury market, because they hold the reserves typically in U.S. Treasuries. And if something crumbles there, and as I was a little long-winded talking about de-dollarization, this whole edifice of the super cycle could come down upon us. Charles, comments on anything together here on this particular synthesis of the debt
Yeah,
super cycle that jumped out at you?
absolutely. And I think I just want to emphasize what you've put here, which is all fiat currencies are going to crack because they're all based on debt expanding without the underlying collateral actually expanding. And so it's not going to be a case where you can save your capital by moving it from the dollar to the euro or the yen or the yuan. All the currencies are all based on the same debt super cycle. So debt's out of control in China, in Japan, in the EU, and in the US. And so the dollar cracking is simply one of many cracks, right? And so we're seeing, as you said, the move to cryptocurrencies and gold-backed cryptocurrencies. There's all these different ideas out there that are trying to link trying to get past the unsound money that is basically all fiat currencies, right? And they're trying to establish sound money again. But this is a tricky thing too, because it's very easy to claim that you've got a gold-backed currency, but as we've discussed in the past, there's a gold standard, if you will, for gold-backed currencies. The currency has to be convertible to gold. You have to be able to take in 100 units of that currency and get gold. And if you can't do that, it's not a gold-backed currency. It's just it's an illusion. It's a PR trick. And so very few countries are actually going to be willing to post their gold reserves as a convertible to their currencies. And so if you don't get that, then you don't really have a gold-backed currency. So a lot of people say, oh, well, this country's claiming it's going to have a gold-backed currency. Well, that at least in the larger scale of things, they have to make that convertible. And very few countries are going to be willing to take that risk, because once you do that true convertibility, you cannot inflate away your currency, which is basically the entire status quo's plan to pay all these pensions. And this is a problem we've talked about many times, and I'll just leave it here. It's true in China. The demographics are changing in China just as they've changed in Japan and Korea and the EU and to some degree the US. The demographics are driving this pension crisis and a stagnation of employment and so on that we've talked about in the past. And so the solution here that the authorities around the world think is we're going to inflate away these problems because we're just going to create as many fiat currency units as we have to placate everybody and survive politically. But that destroys those currencies, and that's the core result of the debt supercycle, is the destruction of all fiat currencies.
And it's underway. It's just you have no way of really recognizing it. Typically, you would see it in the price of gold and silver, right, as these currencies. But with Bernanke's approach called Enrich Thy Neighbor, because we have 95% of the world's currencies trading is in four currencies, which are all the currencies the most debased. That is the dollar, the yen, the euro, and the pound. And so if they all rotate in a ring around the rosy approach, there's no way of measuring it really effectively. Well, there is an answer. And those who are not part of that currency cartel, they have more currencies, China, etc., and other products, which are typically other hard assets that may not be manipulated to the same way, if I can be that strong, that the precious metals markets have been. But they are clearly, you're absolutely right. The fraying is well underway. I make one last comment. I believe the U.S. dollar will be the last one to actually crack, though it's the biggest problem. We'll get a flight to safety as these currencies get into problems. For example, I think we'll see problems in the euro and the yen first. but we're clearly on that road. Charles, for the sake of time, we have to start to the second one, and that is Fraying social contract and the decay of the social order. And I have 3 there, and you have 1, so I'll let you start with one that you think leads to this.
Right. I'm using the term the revolt of the invisible class, because I think one of the manifestations of this decay of the social contract and the social order is that the people who are left out of the political and financial system are starting to say, "Hey, we're still here," because they've been invisible to the ruling class, right? And they're just no longer important in the economy or in the political structure. And so they've been taken for granted that they'll just go along with whatever the ruling elites have decided is the best for their interests. And so the yellow vest protests in France are an excellent example of this trend that we're going to see more and more manifestations of throughout the world, right? And even in China, we know over the last say 4 years, there's been a tremendous upsurge of labor protests. In other words, that workers being laid off or not getting paid the wages they were promised, and so on. There's been tens of thousands of wildcat strikes and protests in China that we don't hear about. So it's a global phenomenon, and so there's no real easy solution here, because we know for a fact that like 90% of the wealth, in stocks and bonds and businesses in the U.S. is owned by the top 5 or 10%, right? And so the bottom 90% are really not benefiting from the status quo any longer, and we see that social mobility is really declining. Like, it's becoming more and more difficult for people, and that we've talked about the higher education conundrum, where we've told people for a generation, just go borrow $100,000, get any kind of college degree, and then you're gonna get a nice, well-paying, secure job, and that's just false. And so instead, people are burdened by $100,000 loan for the rest of their lives. So the social mobility is in decline as well. And so, not to get into it, we'll talk about it in a later show, but I tend to think this is all these manifestations of decline and decay of the social order and social contract are kind of an expression of neo-feudalism, that the ruling elites, everything's working great for them. They think the system's fantastic. It's the bottom 90% who are losing ground, and they're finally standing up and saying, we haven't disappeared. We don't want to be invisible. And that's why we're seeing this revolts around the world.
Yeah, very much so, Charles. You mentioned the yellow vests. That's absolutely true. There was no organizing faction. Typically, when you have rallies and demonstrations, it's a group. It's some form that's been organized, and it's brought to bear. But in the yellow vest, it started with the gasoline tax. But it's people who have never been involved in any political rally in their life. They're not affiliated. They're just angry. It's the general population, and who are just frustrated. And in many ways, we can even go back to Trump winning in the election in the United States. It was the silent majority across the United States who are so frustrated, in my opinion, that voted anti-establishment, and Trump, to them, whether he was a Republican or whatever he was, wasn't part of that. He wasn't part of the normal kind of process. Even as one of 15 Republican candidates, he stood out as almost anti-establishment in so many ways. Some of his advisors were notorious for that. So, but that's what's happening. We're seeing it in a different form. People are really frustrated and dissatisfied, and people will tolerate corruption, crony capitalism, things not working, as long as they feel that their children can be better off than them. That there's a chance for advancement, of getting ahead. If you want to work hard, there's still opportunities. But when that is no longer the case, then all of a sudden the corruption status quo is no longer tolerable, and they get frustrated. That's the breaking down of that unwritten social contract, and that's what we're seeing. And I think we're just at the beginnings of a major wave that's coming. That the ones I'm showing here in terms of themes, I mentioned the steadily fracturing EU. We're seeing democracy versus polarization. At least I'm describing it in that way, as we're becoming almost ungovernment. I have a slide here on the right that just shows you a number of things that we posted at MADASII here just in the last 30 days. And if you went through each of these boxes, they're all about social issues and rebellion, or people pushing back. And it's making it almost impossible for governments to govern without becoming more totalitarian, without more enforcement. And we had a whole show on what China's doing in terms of their social control. Some of this stuff is absolutely unbelievable that we're looking at, but more and more the governments are being forced to do that. I saw the weapons they were using in France for the Yellow Jackets. I mean, it was almost scary of the degree they were going to take to force down what is really people totally dissatisfied with the system. But what we've got in the EU is an ill-founded experiment where, because we have a common currency where we never had fiscal management, it was doomed from the beginning. And so it's also unsound money, and in their case, unsound credit, because their banking system's so distorted. So there's an overlap here with the debt crisis leading to the whole social disorder or decay that's going in. And we're seeing, in terms of democracy and polarizations, those opportunities that are not available, as I talked about, and that's breaking down of the social contract that people just no longer will tolerate. And then when you combine all of that, the governments have got to kind of do something. And what they're doing is they're just going back, as you said, falling back to the same old thing, printing money that will start to create growth and therefore alleviate some of these pressures. But it won't work. It won't, because suddenly there's so much debt versus real growth that we have an illusion of we're still growing, but the rate of growth in comparison to the rate of growth of collateral, because nobody can borrow money without posting collateral, it's not there. And then the total carrying costs of the debt in relationship to the growth of the economies globally and in individual countries, it goes back to Rogoff's analysis. At 90%, they start to fail or they slow down, and we're well over those kinds of limits. And at the global level, when you have $250 trillion of debt on a $72 trillion economy, the maths don't work. It says you've got a contraction, and you haven't created enough wealth because we're also not saving enough of new money to go into the system. That's a whole discussion we've had many times. And the proof of it, Charles, is this slide here. We know for years we've sat here and watched it's the central banks, whether it's quantitative easing, pushing money. We all of a sudden, and we're past taper, where markets were starting to come off, and the governments came in, not the United States, but the others, and we were printing $250 billion a month, and economies took off right about the time of the Trump election in January. It wasn't Trump. It was putting all this money into the global economy. Well, we just went through, and this is what this chart shows, is in the fall, we had this, from October 4th, this big market commotion and dropping dramatically. And at the time, I really believed it was only a matter of time before that they would step in and print the money, but you couldn't find it. You couldn't see it, but we knew it was happening. And actually, at MADAS, I had a whole series of posts because we sensed it. Well, this chart shows that, in fact, they did. They came in beginning in October, November, hidden to us and shown in red, and started printing money. And this doesn't even have the 1.1 trillion that I mentioned earlier in China that came in. So we're trapped. We're printing this money to keep up the asset markets, but it's phony money. And this is where I mentioned this final global reflation attempt. It'll push it up. The markets probably, there's a potential, could see newer highs or a right shoulder, as we show in many of our charts. But it's at the point where it'll start to break. And when it breaks, they can't stop it. That's the problem. And that's why they're almost panicking. We have never seen the Federal Reserve reverse in such a fashion as we saw at the last FOMC meeting. It went from having 2, maybe 3 rate increases to none, and potentially reducing rate It went from quantitative tightening at a rate of $50 billion a month to talking about not taking it down to the level that they were anticipating. And now we're looking at maybe it's only another 500 billion before they stop it, not taking it down to a balance sheet of 2.5 trillion, but 3.5 trillion from 4.5, which is dramatically different. And the markets are reacting accordingly. They're seeing as we're off to the good times, but it's kind of like the last hurrah, and I'm not sure how much more we get. Any comments on any of that, Charles, around this fraying social contract and decaying social order?
No, I think you've really nailed the core dynamic here, which is also actionable for people who are trying to chart their own investment strategy in the very volatile decade ahead, which is this global reflation. In other words, how do you buy off the yellow vests and the workers in China and the deplorables and everybody who is demanding that the system work for them again? How do you buy them off? Well, Medicare for all, free college for all, universal basic income, all of these tremendously expensive social programs, which, as you said, they're not going to necessarily create more collateral. They're simply going to create more free money. And so that's how you get the hyperinflation that you mentioned earlier. So there's, as you say, that trap is very real, but it's going to take a few years to play out. It's not an instantaneous thing. It'll probably take the next 5 to 10 years to play out, as you've explained here.
Yeah, a lot of these things are almost glacier, especially as you mentioned earlier, in terms of demographics. But it's here, and it's arriving, and it's hidden. But all these are happening, and they're happening together, and so it's really tough to see some things. But there are some investment opportunities that are becoming quite clear when things are almost as predetermined as they are. We're locked in to a roadmap now. I say that from monetary and fiscal policies. That I don't see the politicians have much choice or have the collective willpower to do anything about it. Charles, the last one we had was forces of social globalization, which is in many ways what we started with the yellow chart. But you had one and I had two.
Yeah, let me talk to surveillance capitalism, which is author Shoshana Zuboff's term for the way that the United States and other Western countries, how the central, ruling elites or central authorities, however you want to describe it, how they're achieving what China's doing in broad daylight in the open. In other words, what China's doing is setting up a social control system, which looks Orwellian to those of us looking at it from the outside, where it's there's cameras and we did a terrific program on this, Gordon and I, facial recognition and all these things to impose a very tight social control by the central government. So you could call that surveillance by centralization. Well, in the U.S., with the quasi-monopolies of Facebook and Google, we're getting social control through this process of surveillance capitalism. In other words, what we see on Facebook, what we see that's the search results that Google is going to provide, all of those things are opaque. Those are black boxes. We don't really know what's being censored, shadow censored, blocked, or screened, or modified, or edited. And so, and we're seeing that in our society, it's being handled by the private sector, but with the approval or the guidance of the central government authorities. And that's what we're seeing unfold in real time.
Charles, I just had some friends whose daughter got married and to somebody whose ancestry from China. So they went off, the daughter and the groom, off to China for 4 weeks. And when they came back, I was having supper as a group, and I was talking to them about it. And I tell you, I thought even after doing that show, we understood it. She, the daughter, who had never been outside of the United States, was stunned. She just was astounded at the control. It was frightening to her. Things that are just unimaginable. and she was giving examples continuously of the check-in, continuous security, hotels. But it was never where it was something that was in your face, abrupt or harsh. It was always very subtle, but you knew the control was there, and you didn't dare do anything wrong or that was out of line, because you knew within minutes some kind of action would be there. It was almost on a sense that you had, but she gave some hard examples, and even her husband, who had been to China a number of times, but primarily along the coast, and never had a chance to spend quite that much time away from the family. Even he was stunned and nervous. But so and his comment, he's in technology, is that a lot of the technology is American technology. It's not Chinese technology. And it was the question he kept begging is, well, are they only using this in China? Is there other forms of it that's a little more transparent that's being used in various aspects in police force or whatever already in the United States? It begged a lot of questions. Let me get us off track, but it's very much there. What we're going to see from, I believe, Charles, is an inevitable shift towards socialism, and we're seeing that right across the board. And I'm not trying to be a socialist here. As a matter of fact, I am absolutely on the other end of it. But that we, even right now in the United States here, our Democratic Party seems to be in a major conflict of whether the socialist far left is actually going to take control of the party. Whether it's not there or not, it is an indication of the shift that's going on. When a system is not working, people start to believe that you have to take from the rich, give to the poor, or rebalance. There's all sorts of nice words to describe, to try and put something back in the system where there's a better sharing and you have less, you have more equality, less inequality. There's no question our system is completely broken in regards to inequality, and it is out of control. Something's got to be fixed, but it doesn't say it's going to be socialism. But that's where we're going, because it's an understandable language that the young, the millennials through university, they really haven't been taught in a positive fashion why capitalism and why socialism doesn't work. So we're going to see quantitative easing for the people pretty soon. We used to call it helicopter money to avoid the banking system, but it'll be packaged, but that's what we're going to see. I'm reading paper after paper now talking about MMT, the modern monetary theory. And that's the new mantra that they're going to use to bring this in, which really is nothing more than, we used to call it monetary debasement or monetizing money. Effectively is what it's going to do. We're shifting towards that. And so if you start to get this advancing socialism, it's going to come with all sorts of other pressures. But we have to remember, and I don't mean to be on a soapbox here, that when you have capitalism and it's run properly, and we are not running it properly, that's the problem. We're allowing monopolies. When was the last time we broke up a corporation like a Facebook, like a Google? We don't even think of this, or Oracle, because they dominate so much in such a way, a little different than before. When we broke up AT&T, we threatened to break up IBM. We don't do that, and we should. That's why we have the Sherman Act. In many fashions. So what happens is, if you have proper capitalism, you get more for less. But socialism, you get less for more. And what happened is quantitative easing, and here's how we've got into this trap, what it did is it moved both the supply and the net demand curves, for those who took basic economics, to the right. So, and both curves moved to the right. That is, there was more money for supply and there was more demand. But of course, you got to remember, on the demand side, by putting the money out there, making things cheaper, it really brought things forward. It was future demand. There's a big hole on the other side for the demand, and when supply is out for new volumes, if they shrink, there's a problem. So, what we have now is, at the same time, is people save less. There's no savings anymore, and it's savings that is form of collateral that allows investments to continue the whole debt super cycle. And the money's not being invested into productive assets. It's being invested into consumption, as we, in the United States, a 68% consumption economy. So now the demand curve is moving to the left. Okay, and where you see that is the proof at the economy at the stage that it's at, where it's in the United States, it's the best economy we've had. Money velocity is falling. It doesn't fall when you have a good economy unless there's something else more fundamentally wrong. And I've had long discussions with Lacey Hunt on this, and he's just hammering the table. And he's a former Fed economist. So that this is the core kinds of issues. So what's going to happen is, we have goods and services, and this was what people miss. So when you're on the goods or production on that supply side, you can cut production as demand falls. You don't like to cut it, but you start to cut corners, and you don't get the same quality. We've talked about that before, but you can pull it back. It's tough, but it's really tough when you got this much supply, but it's doable. The problem is services. You don't cut, and we become services is such a big part of the economy today. You don't cut. How do you lay off services? You can't lay off professionals. You can a few, but you're almost trapped. There's only a little bit of cost advantage you can get in there. You have to raise your prices. You have no choice. So if you look at what's happening with inflation, our goods have been falling steadily. We have deflation, especially on the products that are imported, without question. But the services side are going up. Anything that's a service, with education, healthcare, etc., is being pushed up, and we have little choice in this. And I think what we're going to see, and it really ties into why it's going to be these forces of globalization, and it's getting into, complexity and collectivism, and what people are going to do from a social contract standpoint, is we're going to see increases, in my opinion, in the things you need and you pay cash for. The things you need to survive, and you don't finance them, you short-term money or cash. But the things that we want, I didn't say we need it, but we want them. We want a bigger house, we want a fancier car, or whatever. Those are the things we finance. That's the things that I think as asset values start to come off, you'll see deflation. But at the same time, we're going to see inflation on the things that we actually need and don't finance. And this is what's confusing people. And in here, this is the big trend that we're going to start to see out of the next couple of years. Especially goes back to my point on de-dollarization. When you start to see trillions of dollars having to come back to the United States as a claim on U.S. assets because the money isn't needed out there anymore, those dollars, it's an IOU. And when that happens, the dollar falls. And when the dollar falls, you remember that what hyperinflation is a currency event. First and foremost, it's a lack of confidence in currency. It's not about price inflation. It drives price inflation, not asset inflation, but the currency falls. And that's the road that this glacier is moving towards. A little long-winded, but did that help, Charles, in any way?
Yeah, Gordon, and I really like the way that you described the competing forces of deflation and inflation, and that we're going to see assets and discretionary financed items deflate in value, and we're going to see the essentials inflate. And I just want to make a quick point about when we talk about socialism and QE for the people, we're talking about we need to separate real quickly. Classic socialism is public ownership of the means of production. So that would be something like, private savings would then be invested in a public bank, which would then loan money to a public utility to invest money in solar panels and wind energy, for example. In other words, there's an investment in a productive asset that the rewards from that productive asset go to the publicly owned entity. That's classic socialism. We're actually not talking too much about that now. What we're talking about is the distribution of free money, right? And that's basically that's it. MMT and QE let's just get the free money and give everybody the free money, and that's going to drive the inflation of the essentials that you were describing. It's not really being invested wisely or even invested at all. It's simply going to power the consumption that is happening within a broken system, and that's not really a solution. It's going to basically lead to the complete breakdown of the status quo. Right now, we're halfway there, but just distributing free money is going to break the system entirely. But it'll take a little while to get there.
Yeah, if we distribute free money, that supply-demand curve changes the demand curve. And you'd think that it would push it to the right, but in actual fact, you'll find that it'll shift it to the left. And there's a big difference, Charles, between consumption and savings, because the whole system is based on savings being reinvested into productive assets. And when you invest them into productive assets, you get wealth and you get a higher standard of living and all the things that go with a higher standard of living. Happy citizens, no social problems. But when you stop and you don't have savings, or the money that you have is not invested into productive assets, it's it's used as consumption. And that's what's going on. You don't get a rising standard of living. The standard of living starts to fall. Even if you can't see it, you feel it, and that's what's going on. And when it starts to happen, you have social decay, you have conflicts within your economy, you have social globalization forces starting to compete at a much harder fashion, and we're currently call it trade wars or fighting wars. You typically start to see that, and it's often the sign of the debt cycle, and in this case, the super cycle starting to reverse. And it goes back to the same old thing. It's always about sound money, living within your own means, and how you invest it. And right now, there is just no question. When I look at, for example, the banks right now that have had a $21 trillion gift, if you would, I apologize, $1 billion to the bottom line, from capital taxation savings, and then they've turned around and their reserve levels are still high, and they're laying off employees. It says, what is going on? We should be exploding with money that's going out to invest. The point I'm getting to, they don't see legitimate productive investments. That tells you that there's something else that's wrong. There's something else very seriously wrong right now. And I've written a whole paper on the illusion of growth. The problem is we don't have real economic. We have economic growth. It's the rate of the growth that is our problem. Another subject for another day. Charles, we have to wrap now. This went on a little longer than I think either one of us planned. But can we draw any other conclusions from this that these charts haven't really brought out? Did you see any that jumped out?
Well, I liked your the summary you just gave, Gordon, and I would end on that as being the takeaway, which is the standard of living is declining for the bottom 90%, and so the real solution requires saving and productive investment, which we're not doing, and the system doesn't actually reward anymore. And so the idea that we're just going to get back to a healthy economy and a rising standard of living by giving away free money, that's what's going to destroy the system. And that's the takeaway I'm getting from the whole the program we did today.
Exactly correct. We have to actually spend our time trying to make capitalism work, not what we've done where we've constrained it from working, either through regulations, licensing, taxation. I'm not trying to get way over on the end. These corporations need to be policed in a way that we've never seen before. Many of them need to be broken up so that there's more competition, because they're really living off advantages they can get through the government in the ways of laws and hidden influencing in their lobbying. We have to reinvent that so capitalism will work. The rest will take care of itself. And that's the role of government. But our government has stopped seeing itself as in charge of that. They see their job as distributing wealth. That is, printing or giving away goodies to get reelected. Sometimes they have to say, no, that's not the right way, but that takes real leadership. We don't have that. And I'm not trying to break up the governments, but we just don't have the leadership nor our whole elected process working to reward those who really bring those kinds of lessons to the fore. They won't even get the money and the campaign financing to carry those kind of messages, because it's not what consumption-oriented corporations want heard, and they're the ones spending the money on the campaigns and on the advertising, etc. So That's where the core is. We got to get back and really fight hard for capitalism to work, and we won't. Until it's broken, and we realize it once again that socialism doesn't work, and we rise up from the ashes. The world won't come to an end, but it's going to be a very tough time for the baby boomers over the next 15 years. Charles, have to wrap, unless you have any final comments, so we'll talk again next month. Any final comments?
Nope. Just visit me at of2minds.com. And a lot of free stuff, samples of my books. And thank you very much for the conversation today, Gordon.
Talk to you next month. Bye.
Bye-bye.